Talk through the Ukrainian situation, because that really impacted sentiment midway through the Wall Street session, and people started selling and hit the sell button after some of these headlines hit the tape. We got Christian Whiton, principal at DC International Advisory, now joining us live on the line from Los Angeles. Christian, so basically investors, when they saw some of these headlines and these quotes coming from the Polish foreign minister talking about a possible invasion from Russia into Ukraine, that's when the panic selling and some panic selling hit the markets. What do you make of these comments, though? Do you think it's a possibility?
Well, essentially Russia is already very active in eastern Ukraine. I think a broader invasion or use of military force beyond what is already going on is unlikely, especially with Putin holding a meeting of his own government officials in Crimea coming up. Likely this is a standard Putin move of engaging in further aggression, mainly just to consolidate and distract from what he has already taken. In this case, Crimea. In 2008, it was part of Georgia, and it was the threat of invasion further into Georgia that almost made people happy that all he took was part of Georgia. So I think we're seeing some of that.
Okay, so this military buildup on the Ukrainian border, these military exercises that Russia's conducting, is this just saber rattling and noise to tell their neighbors that Russia's still the big boy in town?
I think that's the most probable outcome. Of course, as a member of NATO, as a commander at NATO, or if you are an official in the Ukrainian government, I think you have to be prepared for the worst. And part of this is Putin pushing on an open door. These sanctions haven't really hurt him that much. It is true, ruble USD is off. The exchange rate is off. The ruble is off about 13% from its high earlier in the year. But that doesn't really affect Putin because he gets paid in dollars. All of those Russian energy exports, about $365 billion worth a year, gets paid in foreign currency, and actually that makes his life even easier in the short term because he can buy more rubles with them for domestic use. So, you look at these sanctions, there's a lot of talk coming out of Germany and out of Europe, but there's not a lot of bite there. It's not really going to affect Russia. So I think he is sort of pushing on an open door and reacting to that. I mean, he just doesn't see a consequence here.
Okay, well, if that's the case, then why did Vladimir Putin order his government to prepare retaliatory measures in response to the tightening sanctions from the U.S. and Europe last week?
I think that is part of just his broader appeal to nationalism, which is what's going on here. Russians have always wanted Crimea. They possess Crimea for a significant part of their modern history. They're happy to have it back. Putin's popularity has soared, and when essentially there is criticism of Russia, they will almost always react. But if you look there, they've mentioned things. They've mentioned things like preventing European carriers from flying over Siberia as a shortcut to Asia, other minor responses, but so far it's just talk, and they haven't followed through with that. So I don't think you're going to see a strong Russian reaction beyond the rhetoric you've already heard.
Right, and do you really feel that Russia has not been hurt by these sanctions at all? The coordinating global response, which is also to avoid Russian airspace for airlines. We've been talking about a possible credit freeze. Some of these companies, Russian companies, not being able to tap credit markets, but you don't think that's having an impact?
I don't think it's as big as European leaders are making it out to be. A lot of the consequences are deferred. Russian companies can still access shorter-term credit. There is an impact. It just tends to be smaller than what's discussed. If you look at foreign direct investment in Russia, it is off this year. It's likely to be half what it was last year, from $80 billion down to $40 billion. But again, with the amount of currency generated by Russian energy exports, which are doing just fine and likely to increase with future deals with China, it's just not that big of a consequence. Now, Putin does eventually need something like $50 or $60 billion in capital to make the production available for this new energy deal with China. It'll take many years to do that, but that's probably something that can be generated internally. And if you look at the sanctions, it's not exactly a ban on energy investment in Russia. And the proof of that is if you look at all of the oil majors invested in Russia, none of them have announced earnings warnings or impairments or anything that looks like their investments are on the line or in danger.
Christian, thank you so much for your time. Christian Whiton there of DC International Advisory joining us live from